Ever wondered where the real fight is happening in the markets? It's not in the news channels, but buried in these chips, also known as open interest. Let's uncover what the big boys are doing. Hi, I am Pranav VK, your options guide here at Stockshaala by Kotak Securities. And in this video, we are going to uncover everything about open interest so that you can get clarity on how to use them while trading. Open interest tells us how many contracts are open and active at this point, not bought and sold, but open and active. If one buyer and one seller enter into a contract, then one OI is created. Open interest is a little different from volumes. So let's go to the whiteboard and understand this concept in depth. So here in the whiteboard, I have taken 4 different traders. I've taken myself Pranav, Pooja, Williams and Ananya. And we also have buying, selling and the contracts held. And finally, we also have the contracts outstanding. Now let's assume that Pranav has bought 6 contracts and Pooja has bought 4 contracts and Williams has sold 10 contracts. So in total, we have contracts outstanding, that is total, that is 10. So since Pranav has bought 6 contracts, we can say that Pranav is long by 6 contracts. Similarly, Pooja is long by 4 contracts and Williams is short by 10 contracts. So this brings to a total of 10, and this is the open interest in this case. Now let's imagine that all of this happened on Monday. Now let's say on Tuesday, Williams decides to close 8 of his positions. So he goes long by 8 positions. So net he has how many positions? He has 2 short positions. And at the same time, Ananya decides to go short on 8 positions. So net position she has is 8 short positions. So ultimately, again, the open interest remains at 10. Now at the end of Tuesday, Pranav has 6 long positions, Pooja has 4 long positions, Williams has 2 short positions and Ananya has 8 short positions. Now on Wednesday, Pranav decides to add 3 more positions, Pooja decides to add 2 more positions, William decides to add 2 more positions and Ananya decides to short 7 more positions. So net, what is going to happen? Pranav is going to end up having 9 positions, 9 long positions. Pooja is going to have 6 long positions. Williams is going to have nil. And Ananya is going to have 7 plus 8, that is going to be 15. So now the overall open interest has increased from 10 to 15. At the end of Wednesday, Pranav had 9 long positions, Pooja had 6 long positions, Williams had 0 and Ananya had 15 short positions. So the overall open interest was 15. Now let's say on Thursday, Pranav decides to short 5 positions, Pooja also decides to short 5 positions and Ananya decides to go long on 10 positions. So finally, what is going to happen? The net positions is going to be 9 minus 5, 4 long positions, 6 minus 5, 1 long position and 15 minus 10, 5 short positions. So the overall open interest has now gone down from 15 to just 5. So this shows that unlike volumes, open interest can increase and decrease even though the number of transactions are higher. But whereas in volumes, with the number of transactions, the volumes always keeps increasing. It never reduces. In summary, OI is how many contracts exist, whereas volume is how many contracts exchanged hands today. OI is like who's still in the party towards the end of the night. Let me give you an example. Let's say the initial guest list had 50 people and additionally 5 other people came in. So volume is like totally 55. But whereas open interest is like initially 50 people came in, but 25 people left the party, only 25 people are remaining. So OI is 25. So that's the main difference between volume and open interest. So far, we know that option contracts are created by sellers, which means open interest is also representing the sellers. Here let's go to the whiteboard and understand this a little bit in detail. So here I have red chips which is representing different strikes, and the height of this chips also represents the number of open contracts. Similarly, the green chips represents the put options and also represents the open interest of each of these specific strikes. I have taken the example of Nifty 50 and the spot is considered to be at 25,000. Now let's look at the various open interests and for the various calls as well as puts. Since open interest is representing sellers, we know that whenever you're doing call selling, it means that you're expecting the market to go down. Whereas if you're a put seller, you're expecting the market to go higher. Similarly, when you see very high open interest at 25,100 when the market is at 25,000, it shows that there is very high resistance. Similarly, if there is higher OI in put option side, then it shows that there is higher support at that specific level. In this specific case, since we have the highest open interest at 25,100 call option, it means that there is high resistance at this level. But what if I remove half of this and keep it aside? Now what happens? Suddenly 25,000 put option has the highest open interest and this will be acting as the highest support level. Another important aspect that you also have to observe is that in and around the spot price, the open interest is higher, which shows that there is higher participation in and around the spot price. Open interest is not a fixed value, it is a dynamic value, which means it can change within a few seconds or in a few minutes as well. So don't get stuck with the support and resistance that you analyze when you look at the open interest at a single glance. So let's understand OI change in a deeper level so that you understand the effect of OI change. So in simple terms, if OI is increasing, it means that there is position buildup and more participation is expected. Whereas if OI is reducing, it means that the positions are being closed. Now that we have understood what happens when OI goes up and OI reduces, now let's talk about OI change with respect to price. So there are 4 different variations. So when OI goes up along with price, OI goes down along with price, and when OI is increasing, price is decreasing, OI is decreasing, price is increasing. So let's understand these 4 combinations one by one. So the first one is when price is also increasing and OI is also increasing, and this is called as long buildup. The second one is price is increasing but OI is decreasing. This is called as short covering. Long buildup in simple term means there are more buyers interested in the stock and the price is expected to go even more higher. Short covering happens when traders who are already short on the specific stock are forced to buy back because the prices are going higher and higher. In simple terms, long buildup is nothing but new bullish bets being created, whereas short covering is old bearish bets being closed. Now let's go to the third variation, when price is decreasing but OI is increasing. This is called as short buildup. And the fourth one is when price is decreasing but the OI is also decreasing. It's called long unwinding. Short buildup, where the price is decreasing and open interest is increasing, is exact opposite of long buildup. Because in short buildup, as and when the price is decreasing, more and more traders are getting in, showing that there is more bearishness in the market. Long unwinding, on the other hand, is, as the name itself suggests, it is people who are already long earlier are now exiting their positions or actually forced to exit their positions because the price is falling lower and lower. In a single line, if I have to summarize it, short buildup is nothing but new bearish bets being created, whereas long unwinding is basically old bullish bets being exited. So this table is your market mood meter, so don't trade without checking it. Here are a few caution points when you're using open interest. OI doesn't give direction alone. Always make sure to combine it with price action along with volume. In the upcoming video, we will be covering the interpretation of OI along with volume in depth. High OI always doesn't mean it's going to hold. Panic unwinding is a real thing. High OI is like a crowded bus. If everybody tries to exit at once, then chaos is for sure. So let's summarize what we have learned so far. OI is not just a number, but a psychological indicator. It tells you where people are stuck, where the support and resistance are forming, and finally where the price might move. Now that you have unlocked the secret weapon of option traders, go ahead and learn to analyze the open interest along with prices for various stocks as well as indices. If you got more clarity about open interest in this video, go ahead and like the video and share it with your friends. You're watching Stockshaala by Kotak Securities. I am Pranav VK and I'm going to see you in the next video.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.